Hi, welcome to Curious Bricks. Today we're going to talk about Unity Software, ticker symbol U, Q3 2020 earnings report. The company's earnings call was hosted on November 12, 2020. Since this is our first time covering Unity, we will start with a quick overview of what Unity does and how they make money. Unity is one of the leading cross-platform game engine companies. The company was founded in 2004, and it reported a total revenue of $540 million in fiscal year 2019. Unity engine is used to develop real-time 2D and 3D, VR, and AR video games across 20-plus platforms, as well as other simulations. The company went IPO on September 22, 2020. Unity's business is structured into three segments. Create Solutions offers creators to develop interactive real-time 2D and 3D games and apps. This segment generates revenue mainly from subscriptions. Once customers achieve annual revenue above $100,000, they will have to subscribe to one of the plans. The most popular plan is Unity Pro, which costs $1,800 per year. Operate Solutions is the core segment for Unity, which represents more than half of the company's total revenue. This segment offers products and services that assist customers to grow user base and monetize their content. This segment generates revenue mainly through revenue share model. The last segment is Strategic Partnerships and Other, which offers customized services for special application. This segment generates revenue from a mixture of fixed fees, royalty, and revenue share programs. When it comes to competition, Unity's biggest competitor is Epic Games' Unreal Engine. There are also other participants that indirectly compete with Unity on game development platforms. Before we dive into the financial details, let's take a quick look at some key statistics. As of February 12, 2021, Unity's share price was $126 and its market cap stands at $34.4 billion. Neither the trading price-earning ratio nor forward dividend is available, as the company is still not profitable and does not pay out dividends. As of January 15th, the short interest of total floating shares was only 2.6%. Now let's take a look at their latest quarterly financials. We will start with the income statement. In Q3 2020, Unity reported total revenue of $200 million, which had a 53% growth year-over-year. Operate Solutions delivered strong year-over-year growth because of COVID tailwinds. Lower gross margin was impacted by higher professional services, finger food acquisition, and increasing hosting costs. Operating expenses also increased quite substantially to support overall business growth. In summary, Unity reported a total operating loss of $141 million. Unity also published its revenue by geographic area. In this quarter, the company reported strong growth from EMEA, Greater China, and the United States. Meanwhile, core customer growth remains strong. Customers with over $100,000 revenue grew from 553 a year ago to a total of 739. Dollar-based net expansion rate also reached 144%. Now moving to the balance sheet. Unity increased its cash on hand and short-term investments by $1.6 billion to around $1.7 billion from end of 2019, while the long-term debt remains at minimal level. Overall, Unity's liquidity looks quite healthy. In this quarter, the management provided several business highlights. 5 billion plus downloads per month of apps built on Unity, 2.5 billion monthly active end users who consume content created or operated with Unity, and Unity has a high adoption rate by the game development companies and automotive OEMs. The management also emphasized its priority, which is to focus on core gaming market, but also grow other markets such as industrial, automotive, architecture, engineering, and entertainment. As part of the expansion on other verticals, Unity launched Forma in Q4, which is a product visualization tool that enables marketers to import 3D product data and visualize models. Lastly, the management provided Q4 2020 guidance. Revenue is expected in the range of $200 to $204 million, and the company expects non-GAAP operating loss of $35 to $40 million. Since this is the first earnings call for the company, there were a lot of good discussions. One analyst asked the management how they view the pending IPO of Roblox. The management believes that consumers want to express themselves with better videos on social media platform, where real-time 3D makes a difference. Roblox is one of the many indicators that proves this thesis right. Roblox users are younger and are using the creative side of Roblox in a no-code environment to create things within the Roblox universe. Minecraft is in a similar position, but Unity does not see Minecraft and the Roblox world compete with Unity as to identify a new marketplace that Unity can build into. One analyst also inquired on the feedback from customers of the recent price increase. Although Unity could raise the price higher than the announced increase, the company chose to have a rather modest increase. The company believes real-time 3D will be the largest form of media on the planet. Most games are built that way today, but few of the movies, social media content, or other applications. Unity believes that the market will grow exponentially in the next few years. Hence, it wants to focus on the long term to best serve customers, employees, and shareholders. One analyst was also interested in whether there will be any changes on Unity's license seat-based business model. Currently, Unity's take rate in gaming overall is not high, only about 0.4%, while the industry averages between 2 and 10%. The company understands the royalty model is not friendly to content creators, hence they will continue with the current model. However, the management has the confidence that they can increase the gaming business as much as 10 times over the course of the next handful of years. Lastly, one analyst asked how Unity prepares itself for the next generation gaming consoles. Unity's current market share was about 30 to 40% on Sony and Microsoft, and about 70% on Nintendo in terms of the content that was built for the platform. For the AAA titles, these games are built on third-party technology, meaning the content creators use their own proprietary engines that neither Unity or Unreal participates. The management feels that AAA will probably finish the cycle with the principal titles somewhere between 6 and 7 out of 10 being homegrown technology, and the balance split between Unity and Unreal. The management expects to grow from no AAA games and a good position on the AA games to a much stronger position on AA games and the beginning of a meaningful position on AAA games. Now let's take a look at Unity's stock performance before and after the earnings call. Unity reported revenue of $200.8 million, beat analyst expectation of $186.8 million, and its adjusted EPS of 9 cents loss also beat consensus of 15 cents loss. As a result, the market had a quite positive reaction on the following trading day. Lastly, here's the latest summary of analyst ratings of the company. As of December, there were 12 analysts covering Unity. Most of the analysts gave the rating of buy and strong buy, with a handful giving hold and underperform. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.